If you died tonight, who gets paid? Your family or the insurance company? Because for millions of people, the answer is not what they think. Whole life insurance is sold as protection, forced savings, and wealth building. But here's the brutal truth. Most people who buy whole life insurance will lose money. Not a little, a lot. And the people who sell it, they already got paid. Today, we're ripping the mask off term life versus whole life insurance. No sales pitch, no fear-mongering, no insurance jargon. Just the math, just the incentives, just the truth. Insurance is supposed to do one thing: transfer risk you can't afford to someone who can. That's it. Not make you rich, not replace investing, not act as a financial Swiss Army knife. Yet, whole life insurance is marketed like it's all of that. So before we compare them, let's strip this down to first principles. There are only two questions that matter. What happens if you die early? And what happens if you live long? Everything else is marketing noise. Term life insurance is boring. And boring is powerful. Here's how it works. You buy coverage for a fixed period, 10, 20, or 30 years. If you die during that term, your family gets paid. If you don't, the policy expires. No cash value, no savings, no emotional comfort prize. And people hate that. They say, wait, I paid all that money and got nothing? Wrong. You paid for protection and you got exactly that. Let's talk numbers. A healthy 30-year-old might pay $30 to $50 per month for $1 million in coverage. That's less than a streaming subscription. Why so cheap? Because most people don't die young. Insurance companies love that math. But here's the flip side. If the worst happens, your family gets a massive tax-free payout. No complexity, no conditions, no fine print gymnastics. Term life does one job and it does it extremely well. Now let's talk about whole life insurance. Whole life promises three things: coverage for life, a cash value that grows, and stability and guarantees. Sounds amazing. Here's what they don't emphasize. The premiums are 10 to 20 times higher than term. That same $1 million policy? Now you're paying $500 to $1,000 or more per month for decades. Why? Because part of your money isn't insuring anything. It's being diverted into a slow-moving cash account, after fees, after commissions, after expenses. And those commissions? They're enormous. In many cases, the agent earns 50 to 90% of your first year's premium. That's not an opinion, that's the business model. Let's talk about the most misunderstood part: cash value. Whole life policies often take 5 to 10 years just to break even. Meaning, if you cancel early, you get back less than you paid. Even long-term, returns often land around 2 to 4% before inflation. That's not investing. That's capital preservation at best. And here's the killer detail. Your death benefit is not death benefit plus cash value. It's one or the other. The insurance company keeps the rest. So that growing cash pile you thought your family would get? They won't. The company already priced that in. Here's the question nobody asks. Who benefits most from whole life insurance? It's not the buyer. It's insurance companies with long-term locked premiums and agents with huge upfront commissions. Whole life thrives on complexity, fear, and financial insecurity. Term life thrives on simplicity, math, and reality. That's why whole life is sold and term life is bought. Now, important nuance. Whole life is not a scam. It's just wrong for most people. It can make sense if you're extremely high net worth, you've maxed all tax-advantaged accounts, you need estate liquidity, and you understand the trade-offs completely. That's maybe 1 to 2% of people. For everyone else, using insurance as an investment is like buying groceries at a jewelry store. Wrong tool, wrong price, wrong incentives. Here's the brutal truth. If you need insurance, buy term. If you want to invest, invest. Don't mash the two together and call it smart. Whole life sells comfort. Term life delivers protection. And protection is the only job insurance was ever meant to do. If this saved you from making a six-figure mistake, hit like. If someone you love is being pitched whole life right now, share this with them. Because the most expensive financial mistakes are the ones made with good intentions. And I'll see you in the next one.